Hi there, Prophet Dwight Taylor here again with some updates for the CARES Act 2020 options for financial relief. Before we get started, I want to make this disclaimer. Myself, nor the information that I share in this update video is intended to provide professional counseling or professional financial advice to you as an individual or to you as a business. This video contains information that's intended to be shared for informational purposes only, not financial counseling. I highly recommend, if you have questions about how to manage your business, about how to handle personal finances, that you talk with your professional financial counselor. Okay, let's get started. First, I'd like to provide additional information to individuals, and then we'll talk about businesses. For individuals, here are a couple of things you want to consider while filing for deferments and also applying for unemployment. First, deferments. You want to make sure that any deferments that you get with any of your lenders, that means car notes, mortgages, rents, utilities, credit cards, any type of deferments, you want to make sure that those deferments do not require you to do anything in terms of stopping the deferment or reactivating it. The second thing you want to make sure of is that there are no balloon payments. So I contacted AT&T yesterday to get clarity on the deferment that they're granting me. And what I heard from the representative on the line is that AT&T gives you the right through the My AT&T app to defer payments out 30 days. Now that's a good thing. However, the not so good news is that the deferments that AT&T granted are going to be due in a balloon payment once the economy gets spun up again. So you want to make sure when you're getting deferments that you're not ending up signing up for a balloon payment that's going to put you in a financial bind at some point. Also to that point, if you're collecting unemployment or you're receiving a paycheck when you don't have to work because of the Paycheck Protection Program, you want to make sure that if you do have a deferment that has a balloon payment, that you put that money aside. Don't spend it, because once the economy gets spun back up and we get back to our new normal, you want to make sure that you don't have any financial hardship as a result of deferments. Okay, I want to talk a little bit about unemployment insurance. First off, as we mentioned in the previous video, it's a great thing that the government is adding $600 per week on top of the unemployment insurance amount or the benefits that you qualify for. And they're adding that amount for a total of 39 weeks successively. That's a good thing. The first tip I want to give you is that when you sign up for unemployment, they give you the option to have your taxes taken out, or you can decline that option. Here's something to keep in mind. If you don't get your taxes taken out and you file for unemployment and then you receive those benefits, in the next tax filing season, you're going to have a tax bill that's due for the unemployment that you got. Now, it's easier if you elected not to have taxes taken out for you to take out your tax according to your W-9 setup. What I mean by W-9 is your tax configuration for your home and your family. Okay, so if you don't get taxes taken out, we recommend highly that you put that tax amount aside. A fair amount, I think, is 25%, but once again, because we're not providing professional financial advice, you want to get advice from your professional financial counselor on how much tax you should put aside. Okay, second thing we want to share with you about unemployment is that unemployment in Illinois, and once again, I can't speak for how unemployment operates for every state. I can talk to you about Illinois because that's where I am. In the state of Illinois, when you receive unemployment benefits, by default, they give it to you on what's known as a Key Bank debit card. Now, this is a debit card specifically for your unemployment benefits to be deposited every Friday, or how often the unemployment department grants those benefits. And then you can use that card. It's a MasterCard. You can use it just like you use any debit card. But I've received a lot of questions concerning how people can transfer the funds because they don't like using that card. For example, you have a card that you use that grants you cash back. Can you use the unemployment money for cash back benefits? The answer is yes. And I want to give you some tips and some guidelines on how to use this card. There's also a direct deposit option for unemployment insurance, but I haven't seen anyone with that option currently. So I don't know if the unemployment office still offers that capability. So if you have the KeyBank card, here's some things you want to think about. Number one, you can transfer up to $500 a day directly into your checking account with no expense. That means there's no fee associated with transferring those funds. The challenge is that you can only transfer $500 a day, right? So with the government adding $600 weekly on top of your already qualified unemployment benefits, only transferring $500 means you'll still have money left on the card. Well, that's option one. Option two is that you can go into your local bank and have them withdraw the total amount of funds up to $7,000 from your unemployment KeyBank card, and then have your local bank deposit it right into your account. Now, for some, that's an ideal option. For others, it's not so ideal because getting to your local bank could be a challenge. And some even have concerns about going out into the public, into the local bank. So the third option you have is the card is a MasterCard. So you can use the card just as it is. Now, I'm not aware of any cashback points that you would get or any other type of points that you would get. So, if you want to use those benefits with your unemployment insurance, then you might want to think about transferring funds. Okay, that's all the updates we have for individuals right now. I'm going to move on to businesses. The first thing I want to share with you, the first update we have is around the Paycheck Protection Program. So the additional details are as follows. First, those who qualify for this program are businesses that can prove through documentation, accounting documentation, and you want to make sure that the documentation you provide for 2019 aligns with the IRS tax records for your filings for 2019, right? So companies that use payroll, that document or those documents justifying the payroll that you paid out in 2019 is with the federal government if you're using a payroll service. Okay, so you want to make sure that you gather those documents before you apply for the Paycheck Protection Program. In addition, because the amount is 250% of your monthly payroll expenses, you want to make sure you know what your monthly expense is. And so gathering that documentation is good. Another update I want to provide is that the maximum loan amount for the Paycheck Protection Program is $10 million. $10 million. And once again, we talked about the aspects of this program, meaning if you spend 75% of it on payroll or whatever percent of the money you borrow, if you spend that money on payroll, that amount is forgiven. So the next tip is you want to make sure that you are keeping detailed records of how you spend the Paycheck Protection Program funds that you borrowed. If you don't keep records throughout the year 2020, when tax filing time comes around and you apply for the forgiveness of the loan, that if you don't have that documentation, you're going to end up having to pay the loan back. That leads me to the next set of details I want to provide. So the terms of the loan for the Paycheck Protection Program, and what I mean by terms is the percentage of the Paycheck Protection Program loan that you do not use for payroll. You have to pay that back. The loan terms are 2 years, so 24 months, and the interest rate is 1%. If you use 100% of the funds for payroll, you can be forgiven for 100% of what you borrow. If you use 75% for payroll, you'll have to pay back 25% of what you borrow over 2 years. And the interest rate, of course, is 1%. That hasn't changed. Okay, the last thing I want to share about the Paycheck Protection Program is this. What is the process like? What should you expect if you apply for this loan? And I'm going to be as brief as I can, but I want to be as thorough as I can so I level set your expectations. First, the CARES Act is the legislation that put this program into place. The program was designed to be administered by local banks. If you're a business, that means the bank that you currently have a lending and business relationship with. They're the banks that's supposed to actually issue the loan. The challenge is this particular loan is not based on collateral or your personal credit. And because that presents a risk challenge for your local bank, what the government has done is it is guaranteeing the loans through the Small Business Administration. So here's the flow. Your local bank is supposed to make available to you the application to apply for the Paycheck Protection Program. That's step one. Step two that you should expect is an acknowledgement from your bank that they've received your application. Step three, the bank has to provide that information to the Small Business Administration because the bank is not actually the one that's going to approve the loan. The Small Business Administration is the one signing off on the loan. Step four, in order for the Small Business Administration, once they receive the application data from your bank to approve the loan, they need your documentation. As we've mentioned, this is the documentation for your payroll, 2019 of March through February 15th of 2020. They need to provide a mechanism for you to upload and provide that documentation. I've done this. So if you get an email from your local bank, then pointing you to a website called Intralinks. Now, I'm not sure if everyone will use the same document upload, secure document upload mechanism. The bank that I bank with partners with a company called Intralinks. So my bank sent me an acknowledgement that they got my application and they sent me instructions on how to create an account on a different website to upload my payroll and my 1099 documentation. In addition, they also had another form that they needed me to fill out with my signature, and that needed to be uploaded to that website as well. For your local bank, the process may not be exactly the same, but what you should expect is, number one, to complete an application, an acknowledgement of that application. You should expect to have to provide documentation on the payroll that you have paid in 2019, which is the way they're going to determine what loan amount you qualify for. And then after that, you need an acknowledgement that your documents have been received. This is critically important because there is a flurry on this process and the banks trying to, play catch up with the federal government. You don't want your documents getting lost in the shuffle. You need an acknowledgement that you've uploaded your documents and that they've received them. Just today, I got a call from my local bank acknowledging that they received my documents and questioning whether I had any problems with the process. I can't promise that all banks will do that, but you should be sure to guarantee or to verify that your lending institution has received those funds. I also want to say, if your local bank or credit union is not participating in the program, I've talked to businesses that have had this happen to them. If that's the predicament that you're in, there are loan brokers out there. I'm not paid, I'm not doing advertisements for lending institutions, but what I will tell you is all you have to look for is small business loan brokers. You can search it in Google and you'll find a plethora of people. I do recommend going with highly established businesses and not smaller firms, but these loan brokers will help you through the process. This is in the case that your local bank is not participating in the Paycheck Protection Program. If your local bank is participating, I highly recommend that you follow their process and not go through loan brokers. Okay? All right. That's all we're going to share about the Paycheck Protection Program. I want to move on to the Economic Injury Disaster Loan next. One of the reasons I wanted to do this update video is I've had a conversation with more than one business who don't qualify for the Paycheck Protection Program. They don't have W-2 employees and they don't have 1099 employees. What kind of economic relief is provided for those businesses? We do have an update for you. We mentioned it in the previous video, but I didn't go into much detail. And so I want to provide you that detail in this update. The economic injury disaster loan, turns out, now that we have more clarity, is ideal for businesses who were economically harmed by COVID-19 but do not qualify for the Paycheck Protection Program because you don't have W-2 or 1099 employees. This loan program is ideal for you. Now, there are some key differences between the economic injury disaster loan and the Paycheck Protection Program. The $10,000 loan advance that we discussed in the previous video is available to those who intend to take out a full economic injury disaster loan. As we mentioned before, the loan is not new. It's a loan program that the Small Business Administration has been running for some time now. There's a new addendum to the loan that covers COVID-19 businesses that have been unduly harmed by the pandemic. Here are the particulars around the loan. First, you can apply for a $10,000 loan advance. This application for the loan advance requires minimal documentation and the loan application is very short and sweet. So you can apply for it now. Should you apply for it now? I recommend you should have applied for it yesterday. Why? All of the small businesses around this nation that employ 90% of Americans are all applying for these economic relief packages. So the sooner you get your application in, the sooner you're going to get a response. That's number one. Number two, what is the loan maximum for the economic injury disaster loan? The loan maximum is $2 million. Number three, what is the interest rate for the economic injury disaster loan? This is the broader loan, not the $10,000 advance. The broader loan interest rates are commensurate with your personal credit score. The loan does not require collateral and it does not require personal guarantees. But the interest rate that is charged for you borrowing that money will be based on your personal credit. The interest rate ranges are from 3 to 6%. 3% for those with excellent credit, 6% for those with not so good credit, okay? And this is your personal credit, not business credit. It's important to make that distinction. Okay, I think that concludes my updates for the CARES Act 2020 economic relief benefits and options for businesses and individuals. As we previously stated, as updates are made to the program, as it evolves, we'll bring you further updates. There's some more I want to record, so I'm going back so I can cut this last part and put it into the Paycheck Protection Program.